What is going on, ladies and gentlemen? Welcome back to the Daily Stack Report, where we bring you daily precious metals updates. I hope everybody had a phenomenal weekend and stayed safe and stacked smart. All right, guys, so as we go into this week, we can kind of see right here, we opened up a little bit higher with an open of 78.61. We did have a gap up, so I'm definitely looking at this short term to see if we can come back and fill this gap. It does look like we're currently getting rejected by this trend line at $82 flat. Now, we did test it up here around noon today, and we obviously broke it, came back down, tested it again. And again, guys, anytime we test a hard trend line like this and we get rejected, we're going to have a hard fall. But fortunate for us, we double bottomed down here and we broke above it. We did test it on the flip side right here, and we did reject it on the upside, which resulted in that high today of 83.95, guys. But unfortunately, we were not able to sustain those gains, and we went from 83.99, we're going to call it 84, down to 81.21, about a $2.75 swing to the downside. And now it looks like we are rejecting it again on the downside right here. It does look to be going down in this 15-minute. I wouldn't worry about this too much because we do need to fill this gap. And if we learned anything from the big drop that we had from 110 all the way down from, I have to scroll my chart all the way up here. If we learned anything from this big 30% drop, it's that we would rather fill these gaps sooner rather than later. So I'm definitely watching out for this on the short term because to close the week, we closed at 77.94, and to open the week, we opened at 78.61. That is about a 60 cent, 70 cent. It's about a 70 cent open on the plus side, so we do need to go ahead and fill this at some point. And so I'm currently watching out for that on the short term, guys. Gold did hit 5,000 today, which is a phenomenal psychological point in that technical area. So I was watching that as the gold to silver ratio sits around 61 right now. For those that don't know, that includes 61 ounces of silver to create 1 ounce of gold. And so we did see lows around the 40s when we were at our peak, and whenever we were getting slammed down, we did see in the high 60s. So coming back down to the low 60s is definitely a positive move for the silver futures. Guys, we are hitting, I think end of February is going to get crazy. Like I said and have been saying, I do think it's going to be the healthiest thing if we can remain inside of this channel for a little bit right here. Now, obviously, I do want to break into this channel, but I don't necessarily foresee that until maybe the end of the week going into next week. Like we saw when we go up really fast, guys, it does not necessarily mean that we're going to continue going up fast. We like that slow, steady growth that we were seeing kind of right here. I want to bring it back to last week, how we did have this big drop down and then another drop down all the way to 63.98. That $64 level right there. And since then, we've had a slow climb up. And this is what we like to see right here, a slow climb. Let's go up, $2 and come back down $1. Let's go up another 2, come back down another 1. Go up 3, come back down to number 2. We like to see that slow, steady growth in this market because we're not in this to make a quick buck, guys. We're in this for the long haul, and that climb back up to 120 is going to be a lot slower than it was in the previous couple months. Going from the mid 60s to $120 within 2 months is insanity. I don't care if it's Facebook. I don't care if it's silver. I don't care if it's Nvidia. I don't care if it's silver. I don't care if it's Oracle. I don't care what stock you're looking at. That's not healthy in any type of market. And so, guys, we need to make sure we are on the lookout for that. So what drove today's move? First, I think it's a weaker U.S. dollar did help support metals. When the dollar softens, gold and silver often catch a bid because they become cheaper for foreign buyers. The Japanese minister was introduced today, and the Japanese yen is a little bit stronger. and compare that to the US dollar, it did weaken it just a hair. And so that's one thing that kind of weakened the US dollar, which pushed us up a little higher today in the precious metals market. Second, the markets are positioning ahead of upcoming US economic data, especially labor and inflation numbers. When uncertainty rises, gold tends to benefit first, and then silver usually follows with more volatility. But let's talk about the ratio for a moment. At roughly 61 ounces of silver to 1 ounce of gold, the ratio remains historically elevated. What does that mean in plain English? It means the market still prefers gold stability. Silver is being treated as a higher risk despite today's bounce. And so for silver to lead again, we'll need to see that ratio start falling consistently, not just one green day. But guys, don't take that in a negative perspective. Today was a great day, starting at 78, sitting around 81, even though we've kind of rejected this trend line over here at 82. Guys, remember when we were rejecting this one, and then we were rejecting this trend line. So these are meant to get rejected, but whenever we do finally break up on the upside, we can see the positive trajectory that we are able to gain from that. So that's what I'm looking out for this week, is this $82 level. I want to see how much we teeter-totter with it, and if we do see a heavy rejection, then I do believe we could see that $74 again this week, guys, and that would not be scary to me at all, because again, this is the channel we want to hang around in for the next couple of weeks while we continue that stable growth. And if we can go a couple days and kind of teeter-totter with this $82 mark, I think that we will be able to break over on the upside on that. It does take time in a normal market for these things to happen, so keep that in your minds whenever you're looking at these charts and you're seeing us go from 74 to 82. Just know that's going to be normal market activity. Now, if we do get a heavy rejection and we break down past the $74 mark, the next line of support is going to be at $70. And if we are not able to sustain that, which we see right here on February 5th, that we did break down below that $70 mark, and we saw how fast it dropped. Now, obviously, that was rejected, and so we did come back above it, tested it again, and we came back up. So this does look like a solid bottom to me, that $70. But if we are not able to sustain this at least 70, guys, it's going to be a free fall down to 57. That's the last support that we have that I've seen. That was back in October, end of October, beginning of November. That was the last time we had a bunch of support on the downside. And so let's hope we don't get to this area, because this would not be good for any one of us. But I do believe we're going to stay within this $74 to $82 range, and that would be a healthy market trend for this week. Is it the most exciting one in the world? No, it's not. But is it the healthiest for continuing this positive bull run? I do believe that it is, guys. But let's get back to some of the structural things about today. Central bank buying. One of the most important stories today didn't come from a chart, guys. Barron's reported that China continues to add gold to its reserve, extending a long-term trend of central bank accumulation. This matters because central banks don't trade like retail investors. They buy slowly, strategically, and for long-term monetary protection. This ongoing demand helps explain why gold keeps finding support even during these volatile weeks. So gold is remaining strong, and I would argue that, yes, we did have a 30% drop in a day, but since that time, I do believe silver has remained strong, and we have continued a slower growth. Now, the reason why it may not seem like a crazy amount of growth is because we didn't go from 90 to 120 within 2 weeks. Guys, we're actually seeing what a normal market is. So, as we came down, we bottomed out around 71, and then we came back up to that 92. And so I would like to see us come again, bottom down at 65, and let's top out at 95, 97, and then we'll come back down to 80, right? And then let's start using this $81, $82 mark right here as a support. So if we can find this as our next support line right here, again, we need to fill this gap around $78, so definitely keeping an eye out for that. But if we can find this support line right here, we will be off to the races. And by that time, guys, I do think that will be around probably the 17th, the 20th, that I'm checking for over there to find that support. And if we can be on the upside of this by the 16th, the 17th, then I do believe that we could find ourselves in the $95 range within the next week and a half to 2 weeks. As we all know, March is when contracts expire, and a lot of people are going to be demanding their silver. Currently, there's more silver being demanded than there are actual ounces of silver ready to go. So that is going to be an interesting month, and this is just a slow build up to that. So guys, keep stacking and accumulating, because that is exactly what I'm doing. Another important signal today came from ETFs and futures. After last week's sell-off, gold and silver ETFs rebounded sharply, with some showing double-digit percentage gains from the lows. That tells us institutional money is not exiting the metal space. It's responding and repositioning. So that's very important, guys. This is exactly what you expect after a liquidation event. Weak hands leave, stronger hands step back in at lower levels. And so a couple things that I've been seeing is that, there is still euphoria in the market. And, even though we have seen these drops, I am still remaining very, very positive in this. It took, January 30th to February 4th. That's about 6 days right there. And from those 6 days, the 5th all the way up until the 9th, that's when, technically tomorrow, it would be the day that we would see another big drop if this bearish pennant right here is going to continue. But I don't believe that it is. I think we're going to come down to around 75, and then we're going to bounce back up and test this $82 mark again. If we can stay above it, then that would be super positive news for us, guys. But here's what I'm watching for next. And like I said, guys, I want to see silver hold that $75 to $82 range. Consolidation here would suggest the bounce has legs versus just, another dead cat bounce, which is what we saw kind of right here. Now, this was a huge sell-off due to a lot of shorting in the market. There's a lot of news out of China last week where the market did sell off. So definitely making sure that we are watching that. I want to see if gold stays above 5,000. That would keep the macro bullish narrative intact. I'm checking the gold to silver ratio daily. If it starts falling, silver could outperform again. And I want to see where the dollar strength goes. The Dixie, a renewed dollar strength, could pressure metals down short term. This is no longer a set it and forget it market. It's a process. So guys, today wasn't about new all-time highs. It was about stability after stress. And so that is exactly what we saw today, some stability, some nice slow growth versus just huge upswings in the market. And with that, guys, let's go over to our APMEX, our SD Bullion, and JM Bullion. If anyone want to sponsor me, guys, go ahead and just shoot me an email, and we will make sure that we have that all set up for you. But for the meantime, let's check in on my precious American Silver Eagle coins, guys. Silver Eagle random year remains around 95.86 on APMEX. It's going to be a random year that you get brilliantly uncirculated, so keep that in mind. On SD Bullion, around 94.85, about $1 less. And on JM Bullion, this one always gets me. Their website's a little different, as we can see. They have that's a proof that the coal is at 95, and then a random year is at 96. Now it is interesting to see the pre-sale is February 13th, so your order wouldn't even process until February 13th. So keep that in mind whenever you are looking. Now let's go over to 1 ounce silver rounds. 88.46 is what we're looking at here. In stock, ships within 6 business days of cleared payment. So JM isn't saying that there's a shipping delay. Well, they are kind of right here, but the way they kind of hide it is in, they say ships within 6 days of cleared payment. Now, what is cleared payment? It could take 2 to 3 days to quote unquote clear your payment. And so they're kind of hiding behind that right there. By saying that, they're not necessarily saying that once you swipe that credit card, boom, it clears. They're going to want to make sure that you don't do a return, chargeback, something along that nature. Now we're going to go over to SD Bullion, see how they don't have that. Yeah, they don't have that, cleared payment. They're just saying historic demand will cause processing, shipping, and phone call delays. Now this has been going on for quite some time, so that's nothing new under the sun. And APMEX still has their silver delays, so everything's pretty much around the same. They do have their APMEX is always a little bit more expensive. They have their rounds at 93 versus everyone else is at 91 and 89.43. So it does look like for rounds, JM Bullion is going to be the cheapest right now, and for Silver Eagles, SD Bullion is going to be the cheapest right now. Now, I do always recommend calling around to your local coin shops and checking out their pricing, because we do want to support our coin shops, but if it's business is business. If they're higher than what the online stores are, then it just makes more sense to go with the online, because this is a long-term hold. I don't need my silver right here, right now in front of me. Does it make it nice? Yes, it definitely does, but it's not a requirement. It's just something that, I would obviously like. Now, if my local coin shop is cheaper than online, then yeah, I'm going to go support my local coin shop. But at the end of the day, guys, just remember, this is a business, not a hobby for these guys, right? It may be a hobby for us, but for these people, it is a business, and they have to make sure they're watching their bottom line. Now, with that being said, check your spot price, check your lines, check your trend lines. Guys, right now, until we can get some clear confirmation on this right here, I would be a little bit wary of purchasing anything more at the moment, because I want to see, because check this out. If, one, we have a gap right here around $78, $77, and so that could be an easy $4 swing on the downside for spot price as well. And so if we clearly get rejected right here, don't buy just because, we went above it one time. It doesn't necessarily signal buying for me, because right now we're down below it. I need to see this gap filled, and I need to see a clear path above this, and I want to see us reject this a couple times. If I see us reject this a couple times and we fill this gap and we're having slow, steady growth, I think that's going to be the next buying opportunity. Or if we keep getting rejected on this $82 line and we come down here to 74, I think this would be another good buying opportunity. You hear a lot about balancing out your dollar cost average, and this is kind of what it looks like right here. It's hard to buy right here because you don't know if it's going to stay here, but if we do go below and we find our support around 74, I think that's a great buying opportunity for your dollar cost average. And then up here, if we reject this line and we hit this bottom a couple times and we start going up, I think that's another signal to add to your stack, because we found a new short-term bottom, as you could say. But if we get rejected here again and we keep going down, my next buy is around 70, and from there we're in no man's land around 57, around 57.35 up to 70. And so that could be, I think this is another buying opportunity if we hit here. But I don't believe we're going to go down here. Seeing how hard we got rejected here, and it's pushed us all the way up to that $82, $83 mark. Intraday we hit 84 today. I think this is going to be a solid bottom around 70. If we test that again, short term, I think 74 is our lowest that we're going to be hitting. But what do I know, guys? I'm just some guy on the internet. If you like this video, make sure you subscribe and like. And guys, make sure you stack smart, stay safe, and